Stop share. G'day everyone, and welcome to our webinar for tax planning for the end of financial year. My name is David. I lead the farm success team at AgriWebb, and I've got my colleague here, Hannah Arnold, who leads up the partner program at AgriWebb as well. So we have quite a bit of information to run through with you today, some really great insights from our partner, Simon Groth. Do you want to just say a quick hello, Simon?
Hello, yeah, and thanks very much for having me. Yep, I'm excited to pass on a bit of my knowledge today.
Wonderful, wonderful. And Hannah, you guys have been doing a bit of work together recently, is that right?
We have. We're very excited to be working with Rawson Baker as one of our new partners, and we're going to be giving an insight, a short insight into how the new AgriWebb partner program is working. But today, hopefully we're hoping to demystify a little bit of those complex and often quite challenging topics around financial year. I know that we're not particularly financially minded, so Dave and I are going to be asking Simon lots of questions and hoping to make everything a little bit more understandable so everyone can be ready for the end of June.
Yes, and we put a call out in the registration emails and invites that you all would have received to send through your questions ahead of time. So we got a really great response with that, which was awesome to see. And we've included some of those questions in our first round of questions for Simon. But I do encourage throughout the session to utilize the tools that we'll go through in a moment. We'll bring a slide up on the screen so you know how to navigate through the Zoom tools to send through your questions. And then we can run through those with Simon. And there will be a dedicated Q&A section at the end of the session as well to go through it. Yeah, it's great to have everyone tuning in. What we always love to do at the start of these sessions is find out from everyone listening where you are, who you are, and what might be happening on your end of the world today. So what you'll find is at the bottom of your video screens is a chat button and a Q&A button. So they're the two important ones for the moment, where you'll be able to send in on the chat section where you are, a little bit about yourselves, and we'll read those out as we go through. And you'll also be able to use the Q&A section to send through your questions. So we'll monitor that so that we make sure we get all of those answered as best we can. So having a look at this at the screen, you can see that there's also the feature there for raise your hand. Now, if you do want to share a potential story that you might have had in previous years of preparing for tax time, or simply just want to ask your question through the audio, we can, if you click raise your hand, we can turn that on for you and have a bit of a chat. And we've already got some streaming through as well, some questions there. Dane from Somerville, Spalding in South Australia. Very wintry weather here today, not overly wet, but cold. And Michael from Newbridge, self-replacing merino stud, sent to agistment. Sorry, they're flowing in quite quickly. This is great.
Great work.
Nolene from Tokel College in Paterson, New South Wales. And we've got Tony there from Toowoomba. This is awesome. Thank you very much for sending all this through. Throughout the session.
Steph up in Broome. So we've got people absolutely all over Australia. It's great to see.
Kojonup, WA, Rachel. Scott and Kylie from Crookwell in New South Wales. This is wonderful. It's great to have you all here. But what we might do, Hannah, is quickly just run through the agenda. And we'll just cover off what we're going to cover today and then get stuck into it, as I know we're all keen to. So the first thing we'll chat through with Simon is a bit around tax planning. So we're going to have a look at what is happening in the world today that has caused some particular grants to be available for farmers, for producers. And then we'll have a look at some of the standard tax strategy and planning there with things like the asset write-off. And then we'll have a look at what your accountant is typically looking for at this time in terms of records and how we collate that. And then the next section that we'll go into is a bit of information from Hannah and I looking at how AgriWebb's reporting functions can give you a really good insight into all this information that your accountant will need and how to navigate through that and share that. After that, we'll have a look at some goal setting ideas and concepts that we think will be really valuable, particularly at this time of year. And then we'll jump into our Q&A to cover off any of the questions that we haven't yet answered. So please do send those through on the Q&A section. It's really great to see everyone popping through those that information, those insights on the chat as well. But Hannah, I'll pass it over to you.
Yes, just one other point as well. We are recording this and we will be sending out the recording afterwards also to everyone who has registered but can't attend. So do feel free to take notes and certainly be interactive, but we will be publishing the recording at the end as well. So I will just give a little bit of context before we get going about why we've got Simon on the call today. So really excited to announce that we have just launched our partner program, and we're delighted to be working with Rawson Baker Advisors and Simon Groth in particular, who's based up in Tamworth today. So for anyone listening on the call, we have done a lot of discovery and research over the last few months into that whole trusted network of advisors that sit around farming families and around farmers. You will no doubt be working with an accountant very closely. You may be working with a farm consultant, with an agronomist, with a livestock nutritionist, and even maybe with your local retailer who provides you with a little bit of advice now and then. And what we're starting to hear, and we've heard a lot of quite recently, is a lot of our AgriWebb farmers, AgriWebb users, are really looking to collaborate on that data together with a trusted advisor. And of course, at the end of financial year, you know, typically you would love to, it's very useful to share this AgriWebb data with your farm accountant. So hence we've just launched the AgriWebb Partner Program, which allows you to start collaborating on your AgriWebb data in real time with your trusted farm advisor. And Simon is a great example of that, a new AgriWebb partner that we're pleased to be working with. And Simon is actually connecting with his farming clients and is able to collaborate on that data in real time. So saves a lot of time for both farmers and farm accountants having access to that data all the time. If you would like to find out a little bit more about how you can connect with your farm advisor or potentially your accountant for the end of financial year, I encourage everybody to go to agriwebb.com/partners, and you can also give this link to your advisors. You'll see our brand new webpage up here detailing a few things about the partner program. And there's a form at the bottom for your advisor to enter in their details if they would like to find out a little bit more. So we've got slightly tailored offerings depending on what kind of advisor that is, whether it's an accountant, a consultant, or a retailer. So whether you just want to start collaborating on that data for end of financial year with your accountant, or potentially even get your retailer to help you with compliance. So when you're driving into town, picking up that drench or those animal products, and you want your retailer to update those batch numbers and expiry dates in AgriWebb, that's another aspect of the partner program as well. So very exciting, and I encourage everyone to head over to that webpage, agriwebb.com/partners, and get in touch with us, and we can talk you through more details of the partner program.
Amazing. And yeah, it's really, really exciting to see that program kicking off, and we've had a really great reception from it. And it's, you know, it's all about the direction that we're heading in creating this digital ecosystem for each and every one of you to have that at your fingertips and to make it really simple and easy to link in with all the different parts of the industry and the supply chain. So what we might do is jump into our discussion with Simon on tax planning. And Simon's got quite a few insights into what's been going on this year. We've obviously had the ongoing drought we've had floods, we've had bushfires, and now COVID-19. It's been quite a few years, and particularly the start of this year has been interesting as well. So, Simon, would you be able to discuss with us a bit about what is available by the way of grants and things like that for producers who have been affected by any of these scenarios?
Yeah, sure. So as you did, been quite a few, quite an interesting few years. Obviously, a few years of drought for most of the eastern seaboard and the eastern states of Australia. So 3 years of drought, and then a pretty nasty bushfire season, which has affected a lot of farmers. And now we come into this pandemic period, which directly or indirectly also affects farmers as well. So as a result, there's quite a lot going on. So obviously there's been some forms of drought assistance around for a while, whether that be loans or some small cash handouts. When the bushfires hit, there's also some grants available for people who have been affected by that for rebuilding infrastructure and whatnot. And then just recently, there's the stimulus packages from the government. So there's quite a bit out there, and it's quite complex because a lot of the funding comes from different areas. So it can come from the federal government, who then pushes a lot of it down to the state governments. So each state's got their own kind of way of distributing funds, or it could come from an organisation like the Red Cross or Salvation Army. And then with the COVID-19 stimulus, a lot of that's coming through the ATO. So I guess the takeaway from this is you probably need to get some advice from your accountant to make sure that you're getting the stuff that you're eligible for, but also there's a lot of form filling and things like that to go through.
And sorry, I was just going to add in there. So because there's different channels and different ways to access those grants there, is the best way to take advantage of that, is it to loop in with your accountant and get their advice specifically for your situation? Yeah,
spot on. There's also, so accountants are pretty much all over most of these things. There's also, in New South Wales, I know there's rural financial counsellors, so they're available at no cost. So yeah, you've got a couple of avenues, and even the New South Wales farmers and organisations like that provide a lot of guidance. So if you do jump online, there a lot of the state and federal government bodies have been very helpful, but there's a lot of information out there. Yeah, so seek help.
And Simon, one of the things that we do hear, and we have been hearing recently, is the controversy between eligibility for bushfire support and the subsidies for COVID-19, because I know that unfortunately a lot of farmers out there didn't manage to actually receive much support for the bushfires, and now they suddenly find themselves able to claim funds for COVID-19, even though they may not feel like they've been impacted by it. So what advice can you give to people who are wondering, is it okay to claim support for the COVID-19 situation, even if they don't feel like they've necessarily been directly or as impacted by it as the bushfires?
Yeah, that we feel that question every day, and as it turns out, yeah, there's a little bit of an issue there in that most farming clients meet the criteria of the COVID stimulus, and it's based on it's a fairly broad net, and it's based on a revenue downturn compared to a similar period last year. So naturally, a lot of farmers automatically are eligible for that, even though they may not be directly affected by the impacts of the pandemic. The conversations I have with farmers a lot of the time is we've gone 3 years through 3 years worth of drought and a bushfire, and probably apart from concessional loans, probably haven't really had much assistance at all. So they jump at it, but as time goes on, we can actually see that the COVID, the effects of the pandemic are probably starting to trickle down into agriculture anyway. So you can kind of say that it is having an indirect effect already.
And Simon, you mentioned some criteria around the stimulus packages for COVID-19. Am I right in saying that the criteria for that is to show a revenue downturn by around 30%, and that gives you eligibility for the JobKeeper stimulus?
Yeah, that's correct. Yeah, so comparing the test month this year compared to last year, if you can show a downturn by 30%, that's one of the tests. There's a number of offshoots to that, but that's the main test. And that's right. So that opens you up for the JobKeeper eligibility. So that can be for a self-employed and also for your permanent or your long-term employees, $1,500 a fortnight. So it's quite significant.
Certainly worth claiming, I think, if there are fewer hoops to jump through, certainly there. So Simon, a few of the questions that we had that came in before this webinar were, are there any new tax changes that have happened that people should be aware of? I know that it can be quite a maze out there keeping up with everything that changes. So is there anything specific that is worth knowing as we approach 30th of June?
Yeah, spot on. So as you know, if you follow the news at all, you know that at budget time there's announcements left, right, and centre, and those announcements basically trickle down into tax legislation most of the time. So things can change year by year. One of the ones that does change quite a bit is the instant asset write-off. So that's been up and down from $1,000 to up to $30,000. But most recently, the government's put it up to $150,000 as part of the COVID-19 stimulus. So that one most people are aware of. You see a lot of advertising around that at the moment. That's just a blanket tax incentive across the board for small businesses. But specifically to agriculture, there are some more probably not as well known measures, such as the ability to deduct water facility costs or water infrastructure costs, fencing and fodder storage. So those are quite significant. They've been around for a little while. But probably the biggest one at the moment is that instant asset write-off, just due to the scale of the benefit on that one.
And so, Simon, we when we were chatting to you earlier, running through a bit of a practice to this, we actually put a bit of a slide together to share with everyone listening in, because it can be a bit of a challenging topic to understand how the instant asset write-off works.
Yeah.
So would you be able to run through the example that we've got here, just to clarify with everyone of how it works and then what it means?
Yeah, sure. Yeah, so this is the numbers in this are very much simplified. So we're saying that before depreciation or an instant asset write-off, your taxable income's 100 grand. We're also assuming that your tax rate's 30%. So in this example, we're buying a solar pump for 20 grand, and basically that reduces your taxable income to 80 grand in this example. So that's a straight out tax saving of 6 grand. Obviously that's a very, very simple example, but you get the idea. So the alternative is that asset would be depreciated over time and the deduction would be much lower. So it's quite significant. And yeah, so that's just a simple demonstration of the cash tax benefit of the instant asset write-off.
I think certainly we know that it can be very confusing as well, and this is where certainly it's not my forte, so we found that an example definitely helps illustrate it. But there are more details as well and explanations of this on the ATO website.
That's right, and obviously it depends on your individual situation, because everyone has a different tax structure, everyone has different tax rates. Yeah.
We had a question as well, Simon, a fantastic question through from Ben Boland as well recently, which was all about the difference between the writing an asset off as an expense or capitalising on projects as well. I know this kind of touches on what you've already said, but would you be able to give a little bit more colour there around the expense of capitalising?
It is a good question, because we're seeing more and more that farmers are looking at their financials and using them as a management tool. So if you, for example, spend over a few years, spend $500,000 on water infrastructure and write it all off for tax, from a tax point of view, that's written off through the profit and loss, so it doesn't actually sit on your balance sheet. However, $500,000 worth of water infrastructure would well and truly be an asset that you'd like to show. So yeah, so there becomes what we call a management report. So having that, so for tax purposes, yes, you can write that off. However, for management purposes, you probably want to leave that on the balance sheet, so that when you're going to the bank or when you're looking at your net position, that expenditure sits there as an asset. So basically, you have your tax figures and you have your management figures. So what goes into your accounts? Well, your management accounts, yeah, well and truly you would capitalise that, so that you can see, the true value of your infrastructure on the farm. And the same goes for livestock. So the ATO values for costing livestock are very low. So some people do like to update their market values regularly and put them on the balance sheet. And it's quite significant now, because obviously the market value of cattle is quite high. So it's quite a significant thing to show on your balance sheet.
Yeah, definitely. We just going back to the instant asset write-off. There's a few questions that are flowing through, and it'd be good to just clarify a couple of things.
Yep.
Can you claim any number of individual items up to 150K? For example, a tractor worth 170K. And can you shed a bit more insight into that?
Yeah, so each individual item under 150 grand can be written off. If it's over, it's got to go be treated under your applicable depreciation rules. So yeah, you can have more than one, but if it's a tractor that's 170 grand, or a tractor that's 100 grand, and a bucket that's 70 grand and it's put together, well, unfortunately that's considered one asset. So yeah, but individual items under 150 grand, yep, spot on. They can each be written off if they're eligible.
And Simon, just to follow on from that question, we have had a question through about the timing. So if a new tractor has been purchased in December, is the 150K backdated for this?
There's a time. The time frame was kicked off when the government announcement was made in March. So it has to be after that period.
After March.
Okay. And in the case of an asset being purchased through finance, does that factor into any of this?
No. So if the asset is financed, you can still utilise the write-off. Yeah.
Okay. Great to hear. Thank you for those questions coming through. Keep them coming through, and we will endeavour to answer them as we're going. And if not, we'll be able to cover them off at the end of the session during question time. The next question we had to go through was around risks associated with using farm management deposits. And we'd love to know your thoughts, Simon, on using these and how you should manage these up to the June 30 period, and maybe even just a bit more context around what the farm management deposits are.
Yeah, sure. So farm management deposits basically allow you to put, before 30 June, if you put a lump of money on deposit in a specific farm management deposit with a bank, you can deduct that amount as a straight out tax deduction. But the rules, you do have to be very careful because that money has to be in the farm management deposit for 12 months so that you can get the deduction. So it's really a tool for when you've had a whopping year and you've got cash in the bank and you've got a tax problem. You can put that cash in and basically it's locked away, and then it's assessable income when it comes back in. So you do have to be very careful. My experience over the years is get proper advice, because I suppose being the devil's advocate on this one is if you have a few FMDs in and you need the cash and you go and pull it out and don't tell your accountant, you might have a couple of $100 grand's worth of taxable income that comes in, and that can be a tax disaster. So they are a good tax management tool. However, they're fraught with danger if they're not managed properly. Most of the times when there's that disaster situation is they've been put in June this year, hasn't been for 6 months. So come December, January, need the money to buy fodder, rip them out. They're taxable. And there are some, the government have, in a drought situation, they've been a bit more lenient. However, in a normal year, that is an issue. So it's the tax deduction versus working capital. So cash at bank.
And Simon, would that fall under the concept of the abnormal production income? In relation to the selling off stock due to drought, there's a question that's come through around revenue being a challenge for some as they've sold a lot of stock during drought and bushfires, and then that's impacted and distorted the view of the sales.
Yeah, that is a good question. So there are rules around forced disposal or abnormal income due to drought or natural disaster. So in that case, if you sell half of your herd or your flock in 1 year because of drought, or they're forced to be sold because bushfires destroyed your fodder, the ATO have rules that allow you to spread the profit of those over 5 years or up to 5 years, depending on how you go. But yeah, so there are measures there that you don't get whacked for tax all in 1 year, as long as you meet those criteria of drought or natural disaster.
Okay, fantastic. We have also had questions in advance and just now another one about the prepayment programs. So if farmers do have these programs with stores such as Nutrien or Elders, what are they, first of all, and what are the benefits of using them? Yeah,
so these are basically allow you to prepay the purchase of produce from these stores. So they're allowing you to, before 30 June, say prepay $20,000 worth of fertiliser or grain that you're going to purchase in the next year. So you're kind of bringing forward the tax deduction to this year for something that you'd normally pay for next year. So similar to farm management deposits in that you're putting the cash in the cash has to physically be transferred. And I suppose the catch with that situation is that the cash has to be spent in the produce store. So there is a warning there about, you know, locking up your cash for the sake of the deduction and foregoing cash flow. Because if you need the money for something else, you actually can't access it. You've got to spend it at that store. Yeah. So it can be handy. Like if you're buying your normal supplies that you know you're going to buy, yeah, it can be a handy tool.
Yeah, right. But yeah, I mean, it certainly sounds like there's a bit to consider there in terms of the funds and where you'll be pulling those from.
That's right. Yeah, and it should, these decisions shouldn't be like a snap decision. You really need to look at your cash flow forecast. I'd say that's 50% the tax benefit, 50% working in with your overall tax cash flow plan.
Yeah. And Simon, from your experience with some of your clients, do you see this getting taken up by many of them? Like, what's the reception like?
Yeah, you do see it occasionally. To be honest, at the moment, most people don't actually have the cash to put away. You know, coming out of drought, especially graziers, people might not have cattle. You know, they just don't have any income because the cattle are long gone, or they've bought cattle through the drought and they're getting them fat to sell at a high price. So the cash flow is actually fairly slim at the moment. Some people are calling it a cash drought because flowing on from the actual climatic drought. So FM farm management deposits and these prepayment schemes and the 150k write-off. To be fair, like not many people have 150 grand lying around at the moment. So the take up of these, I'd say, isn't great at the moment, purely because of the cash situation.
Thanks, Simon. So we'll just have a look at a couple of quicker questions that we've just had through on the Q&A, and then we'll move on to the next section. So we just had a couple of questions in here. Does the asset, going back to the conversation we had about assets, have to be on farm by June the 30th?
Yeah, it has to be paid for and installed ready for use is basically a short version of the criteria. So yeah, it's got to be paid for, installed ready for use.
Great, that's very clear. And is there an accelerated depreciation for items over 150k?
Yes. Yeah, so reverting back to there's small business pools which are a form of accelerated depreciation as well. Yeah, so the kind of short answer to that is yes. If you're a small business, there is favourable accelerated depreciation. It just depends on the asset and the circumstances, but most small businesses would go into the pooling, which is a form of accelerated depreciation. Yeah.
Okay, brilliant.
So it's not the end of the world. If the asset's over 150 grand, you're still getting a reasonable depreciation deduction.
Great. Okay, thank you. And then one more question, and it's fantastic that we're having these questions in, so we are trying to cover them all. Is there a situation where you'd be better off having a farm management deposit at very low interest when you have debt and paying higher interest on that?
Yeah, that's an excellent point. Because as you know, interest rates are close to zero, the official rate. So your farm management deposit attracts similar rate to a term deposit, which at the moment is not very much at all. So from a management, an overall kind of business point of view, you might be better off if you're paying 6% on your overdraft, or you know, if you're paying 5% on your core debt, well, maybe you should just pay your core debt off and pay less interest. Depends on your situation, but that is a very valid point. Yep.
Okay, food for thought, definitely. Thank you. Okay, shall we move on to the next section that we have here, which is just about starting to work with your accountant and getting ready in time for the end of financial year. So we know that, I think Simon, you told us this morning that already today you've received 3 phone calls from farmers sort of slightly worrying about the time frame. So we'd just love to know, first of all, what are your thoughts about getting everything ready? And it can often be a time that people start to panic a little bit. And what exactly is an accountant looking for?
Yeah, we do. Once the 1st of June ticks over, something happens in people's heads and they start worrying about 30 June. So, but it is the tax planning season. So, as an advisor, like we're sitting down having tax planning meetings. We've already had some, and most of them are happening in the next week or so. We need basically clean and live data. So we need your year-to-date data to be fairly well up to scratch in a way that we can use it to do a fairly accurate tax calculation. So, and that comes down to having a good system in place all the way back from 1 July. So we prefer it if your accounting's in the cloud, but also having access to the management data. So a lot of that we can pull out of AgriWebb in relation to cattle sales and purchases and what's on hand. So that's the crucial data. Clean, reconciled year to date, cattle numbers, purchases, sales, what's on hand, and also a pretty clear idea of what's happening between now and 30 June. So any significant sales, significant purchases, or money going into super, FMDs. It's really important that we know about those because they're big chunky bits of expenditure that can cause a bit of grief if we don't know about them.
Right, very clear. So what you've got on hand: significant sales, purchases, farm management deposits, and super deposits, as you said. Fantastic.
And Simon, typically when you're working in with your clients, do you take a different approach for people who are using farm management software and people who aren't, or is it sort of the same approach? And when do you typically start these conversations and navigate through the month of June?
Yeah, so the tax planning conversation normally kicks off well before June, like late April, May. We start stoking the fire, so to speak. So, but the difference, so if someone's using farm management systems in conjunction with a good cloud accounting product, basically the process is 10 times less painful than it would otherwise be. So us having to go and prod the client to get information that's almost 12 months old that is not ready yet, that's just painful for everyone. So if they're using the good systems, then often if they're using AgriWebb and we use Xero for our cloud accounting system, if those two systems are up to date, we can often jump in without even prompting the client. But if the data is up to date and clean, the client doesn't have to do anything. The data's already there. The alternative is scraping together a data file or reconciling 6 months worth of transactions, and the time involved in that's just enormous. And so the fee can be higher, but just the effort to get it all together, it's a bit draining for everyone.
Yeah, and I suppose I guess one thing that I see would be a benefit there in terms of the time management. That would probably open up the door to then be able to take the time to think about, going for these grants that are on offer and the different options, rather than spending the time in collating those records and things like that.
Yeah, spot on. So advisors these days have, when a grant or some government assistance lands, we naturally scrape the top of our client base and see who's else. Like we can run software programs over the top of the cloud data that show who's eligible. You know, it's very, so if the data's there available for us, we can naturally just provide add-on those top-level services that, you know, can be very beneficial for people, especially in these times. Yeah.
Fantastic. So I think going back to those panicked phone calls that you received, Simon, I think it's probably fair to say that as everyone on the call know, we think that keeping better quality farm records certainly saves a lot of the hassle and that panic at the end of financial year. And hopefully that time can be better spent, and not being, I think, chased by your accountant is sometimes the expression that we hear.
Yep. We don't like chasing as much as the clients don't like being chased.
Yeah.
Right. Well, we really, really appreciate that insight, Simon. And thank you to everyone who has been sending through those questions. Please keep sending them through, and we will answer more as we go at the end of the session. But Simon, what we're going to do now is just run through from our end, and it kind of ties in nicely to what we were just talking about, an example of how we can extract these insights and this data from AgriWebb as an example for everyone who is currently using it, and if there's anyone listening in that is just looking to learn a little bit more. So please stay on with us, but we do appreciate your insights there. So Hannah's just going to share a screen for everyone listening in at home. And we're just going to have a look at some of the reports that are available in AgriWebb, what they're designed for, how they work, and how you can extract that information to share that with your accountant. So if you are sort of in that preparation time and already have these questions, it might be very beneficial for you, and it might also jog you, kick you into gear if you are sort of sitting there with it looming. So Hannah, I'll pass it over.
Yeah, so we know that, as we said before, really keeping good quality records every single day and putting in those records as you think of them is going to promote those good habits and make especially tax time a lot easier. One of the areas of AgriWebb that we certainly encourage AgriWebb users to really get familiar with and make the most of is our reports. So the image that you can see on the screen at the moment may look new to some who may not have delved into their reports recently, but we're constantly looking to make the reporting within AgriWebb as easy to use and intuitive as possible. So you'll see that for those of you who may not be familiar with AgriWebb, we've got 3 sections in here. We've got cropping reports, mob reports, and rainfall, and a description underneath as well of each. So this is the AgriWebb web app. So you'll be putting in your reports day to day from the paddock, from the ute, whenever you feed out, treat, buy a new stock. You'll put that straight down into the app every single day as you think of it. And then when it comes to starting to look at the performance of the business and ultimately driving better decisions on farm based off this data that you're collecting, this is where you would jump into the AgriWebb reports from the web app, preferably with a beer in the evening, and start to really understand the performance of the business.
Yeah, absolutely. And so some of the reports that are going to be crucial and really valuable for you at this time of the year, one of them is the Livestock Reconciliation to start with. So this is going to give you the detailed view of your stock and their transition, their movements throughout the property during the season. So what you'll find, and I might actually encourage anyone who is listening at home, we're obviously in front of the computers at the moment, so pull up a window of AgriWebb next to you if you are using it, and you can have a bit of a look through as we're talking about these reports, look at some of the different customization tools as well. So yeah, if you're able to quickly log on, that'll be great to follow along. But essentially, each report has a set of customization tools to help you navigate through and really hone in on the specific data that you need. And I think one of the key ones at the moment, and it's real simple, is to extract the year-to-date data, the financial year-to-date data. And what you'll find in the top right-hand corner of each report is a date range selector. So we've got a preset in there for this financial year or last financial year. So you can actually get that year-to-date data straight away. The report will adjust and pull out all the relative information for you.
As we said before, if you have linked in with your accountant, so you can connect with them via AgriWebb, as we were saying that Simon is doing with some of his farming clients, you can actually give your accountant that real-time visibility there and then. So once you've connected with your accountant, they are able to work with you on your reports and access that data. For those of you who haven't yet done that, you'll see that there's also an export button as well. So you can export these reports out and then email them over to your accountant very easily.
Yeah, certainly. The export function is powerful. You might have a bit of a bespoke reporting process on your operation, and it is really handy to be able to export those reports and manipulate them in your own way. And the other tool that I will point out is the customized columns tool. Now, this one is important because you may not need all those columns that are presented in the report. You may just be wanting to hone in on a few different details. And what you can do is select that option and add in or take out different columns depending on what you're looking at. So if you're specifically honing in on a particular age class of stock, or in the cost of production report, just a certain few costs from key events, you can also do that and condense that report down and make it a bit cleaner to view.
Cut out the noise.
Yeah, cut out the noise.
Okay, we will just have a look at the livestock schedule as well. So this is an absolutely critical one for your accountant and is something that we added into AgriWebb at the end of last year. So those of you who have managed to pull up a window and are comparing these, jump into the livestock schedule and you'll see at the top, we've got three separate boxes. The first one where you break it down into species, so whether you're wanting to pull a livestock schedule for your cattle or your sheep. You can then see next to it, we've got a box that says natural increased value. So we alluded to this earlier on in the webinar about the ATO values for both calves and lambs, for example, that are obviously inherently very low, but will actually populate into this report for tax purposes. So as you can see, it's automatically populated in there, $20 for a calf. And you'll see on the furthest box along on the right-hand side, we've got the closing stock value for the 31st or whatever date period you're pulling it for that you can pull from your tax statement. So once you've entered in these three areas, you'll see that the report will automatically populate underneath. So we've got natural increases, purchases, cost of sales. And for those of you who are using Xero, this report will actually be in the perfect format to export out of AgriWebb and import directly into Xero. So you'll have some very happy accountants out there for those of you, those accountants and farmers who are using Xero. Otherwise, it can be exported and is still in a great format to give to your accountant, regardless of what system they will be using.
Thanks, Hannah. Just on the value of the stock there, we did have a question come through earlier that was around, why are the figures so low? And Simon, if you're able just to pop your microphone on, is there an impact to these values being so low? Is there an alternative such as market value that can be used?
Yeah, so you can opt to use market value in your tax return. Most people don't, but you can in a particular year. So, but often historically, the ATO values have been used, so that flows through typically in your closing stock value, normally being way lower than what the market value is, but you do have the option. So for your management accounts, yes, you can do it, but you can also do it for the tax return if you wish. Yeah, but it depends on your tax situation, obviously.
Right. Okay. Thanks for clarifying that.
Great. You'll see as well, we have got just another glimpse at a report here of gross margin. So again, you'll see at the bottom, whenever it comes to any kind of costs that you're entering into AgriWebb, and the examples here, we've got feed costs, treatment costs. So how much are you paying for that feed or those treatments, or how much does it cost you to produce that feed on farm? And that feeds directly straight into these reports. And cost of sales as well will bring in. And then you can see this report will break down into species as well. So we've got a really nice view of incoming and outgoing funds, whether it be for your sheep or cattle operation. Want to talk about cost of production, Dave?
Yeah, so the cost of production will, it's similar to the gross margin, however, it won't provide the information of the income. So it will just be a report of all your costs across the different events, shearing, marking, sales, all that kind of stuff. The transport costs will go through to this report. Now, just again, with the different tools that are available, there's different ways to group and filter these reports that we've gone through here, so that you can extract specific insights on, say, age classes that you might be referring to, different mobs, tag colors. You can use that to filter through as well. So it's really powerful. The first step is jumping in and getting familiar with these reports and sort of reviewing the data that's in there. But then the next step is going through and starting to filter and really hone in on the particular insights that you're looking for.
Another, I guess, a tip for anyone who is considering starting to use a farm management system, or those of you who may not have spent very much time in the reports, they're actually a great starting point as you start to plan out goals for the year ahead, and a great way of looking to see what kind of information you want to capture. So we would certainly encourage everyone to have a look at the reports, have a play with them. They're very, very easy to use, as we said, with customizing columns and being able to choose your date ranges. And often you can look at the report and see, what is the information that I want to see here? What do I want to capture? And then work backwards from that and make sure that you're capturing all the right data in the app day to day.
Certainly, and that definitely leads us into the next point that we wanted to cover and concept that we wanted to cover around goal setting. And we feel at AgriWebb that this is a really key concept to be aware of and to carry through, definitely through your first year with AgriWebb, but certainly, you know, an ongoing practice to set some goals for what you want to achieve for the business, regularly check in on those goals, and adjust them where applicable. And Simon, if you want to pop your microphone on again, it'd be good to get some insights from you specifically around the financial goal setting. And do you work in with your clients around some of these goals for maybe short-term, long-term?
Yeah, most definitely. It can be a bit of a shift in mindset for, well, in my experience, it has been for farming clients when their accountant comes and talks about the bigger picture. However, I feel quite passionate about that, in that, you know, the future of agriculture in this country has got so much potential. So the business model, broad scale, will change, and for the better. So my conversations are around not only that, but also having peace of mind. So knowing what the business is looking like in 12 months' time, 5 years' time, 20 years' time, and then that leads into the inevitable succession planning conversation, which is a whole different beast. However, it's all part of the same. You know, any farming business should really have that as a long-term goal, something that's being worked towards in one way or another. So from that high level stuff, you can wind it right back to what's happening in the next 6 months, which is equally important. And that's where the farm management tools are very handy, because they're at the base, at the coal front, but they're also, achieving your short-term goals allows you to achieve your medium and long-term goals. So it all kind of ties together.
100%, Simon. And I think that ties in very well just to this couple of points we put here on this slide. Often these are the key reasons that a lot of our users have come to us looking to achieve goals in the business. And I know Dave's a big fan of goal setting, and it's a really fundamental part of our kind of onboarding and implementation process. Some of the examples we have here, whether it be, as you just said, succession planning, very, very important to work out certainly business goals and financial goals for the business, but also individual goals and different stakeholders in the business, whether it's looking at goals for retirement and then goals for the younger generation taking over the farm. I think it's extremely important to set short and long term and then continue to review these. On the drought resilience, Simon, this is something that I know unfortunately has touched many, many farmers across Australia. Do you find there are specific financial practices that are most useful for clients or your farming clients when it comes to achieving resilience and planning ahead for times when people are afflicted by drought?
Yeah, not really, to be honest, but it is I suppose, one of the benefit that comes out of going through such a big drought is that farming families and businesses are very open to talking about planning for the next drought, which I think is a great thing. No one really wants to get stung like they did in the drought just gone. So people are very much thinking about, well, what do we need to do to, put fodder away, build up water infrastructure, or just have cash reserves, which is a totally different conversation to what we were probably having 5 years ago. I think it's just become a bit more of a reality that, droughts are going to come, and they're probably going to be bad. They're just going to be a part of life. So having the financial kind of backbone to be able to handle it and just operate through it, that's where we want to be. So people are very much people are keen to talk about that now. So that's one of the good things that's come out of that drought.
Yeah, absolutely. And I think it's all very good topics of discussion. And so just to recap for everyone listening in, if you are, aware of this goal setting concept and do want to start thinking and putting some of these thoughts down, and then sort of reviewing and looking at how you're going, some good ways to do that, and a bit of a framework, I suppose, is to sit down, get the family together, get your business partners together, brainstorm and set your yearly goals. From there, work backwards and set smaller goals for how you're going to get there. So this can be broken down into, say, weeks ahead and months ahead. And that will start to pave the way for how you end up achieving your yearly goals. And these are the ones that you can sort of review at the end of each month, or as you regroup at the end of a quarter, or even at the end of the financial year. This is a perfect time. It's traditionally a time for reassessing and planning for the next financial year. So it's a great time to sit down and get these goals into an actionable flow. And the way you can track this at the moment in the AgriWebb app, if you're using it, there is an area for farm notes under the farm summary. So I would advise pop them down in there. They'll be at your fingertips. You can refer to them. Everyone on the farm would be able to see them who's using the app. And then as you go through, review these goals and check in regularly. And if you do want a bit of insight and advice from the farm success team at AgriWebb, we can certainly do that, and we can give you a bit of a hand. But just to recap, particularly for this time, in terms of what the short-term versus long-term resilience and goal setting might look like. There is short-term things around, you know, rebuilding your herd, rebuilding, particularly after the bushfires, your infrastructure, which sadly we've had quite a few people that have been affected. So, and of course paying off some debt that might be there. And as Simon mentioned, long-term goals would look like preparing for, you know, for future droughts, future natural disasters, and setting up a sustainable business model and putting away cash reserves.
And a good point that I've just seen come through from our co-founder, Justin Webb, is this is a great time for prices at the moment. We've got all-time land price highs and very resilient beef prices. So this is really a time as well to maximize profits. So looking at capturing records, obviously understanding your costs and understanding your profit, being able to report on those, is really key to, as David said, just getting to this time of year, resetting, looking at, you know, profit that we've made this year. We're in a great spot in terms of meat prices at the moment. So looking forward ahead and setting goals based on profits as well.
Absolutely. There's always a way up, and it's certainly not all bad despite the current environment. It has been quite a struggle for some people, but there's certainly positives everywhere we turn as well. Now, we are conscious of the time and we are going to wrap up shortly, but there are still a few questions to roll through. So we'll go through some of the ones that have come through, and if you still are tuning in and want to send those through, feel free to, and we will answer them. We do have a question that came through earlier around how income from a new carbon farming affects the tax return. Simon, would you have any insight on that?
Yeah, I'd probably need to know the full detail, but yeah, carbon farming would be pretty much like any other farming, utilising an asset to make income. So yeah. Sorry, but I'm not quite aware of any specific treatment of it when it comes to income. It's a fairly new concept, and it's not very but it is starting to take grip now that the methodologies have been worked out a bit better.
Understandable. And so I think for our listener who sent that in, I apologise, I haven't got your name on the notes there at the moment. But if you did want to find a little bit more information about that, I would probably advise chatting to your accountant or an advisor in a bit more depth around that one. And Simon, there's another question there. Looking at farm partnerships, business partnerships specifically, around this time of year, how would you advise around deciding how much profit to allocate to each partner when both may have an off-farm income?
Yeah, so the goal of tax planning is to minimise tax, obviously. So in our firm, we look at what the taxable income is for the family group, and you're trying to even it out so that each person falls in the most appropriate tax bracket. So that's based, you know, if you're both making off-farm income, well, there's probably not so much you can do because you've already earned the income from salary or whatever it is. So the idea is that equalising it so that you're both, you know, around the same taxable income. But it depends. There's a lot of caveats to that. You need a partnership agreement that specifies you can do such an allocation. And yeah, but the crux of it is that, yeah, equalising the incomes is normally the main goal.
Okay, fantastic. Well, I think that's all the questions we've got through at the moment. If anyone would like to throw in any last questions into the Q&A, do so now, or any final comments. We have a very exciting offer for anybody who is not yet using AgriWebb or a farm management tool and are interested in making life a little easier at this time of year by collecting better quality records. So do get in touch with us, come and find out what all the fuss is about AgriWebb. And if you head to agriwebb.com, you'll see more details there. But if you would like to get started and you are obviously an attendee of this webinar or watch the recording, we have a free month on any of our yearly subscriptions with this discount code that you can see on the screen, free month 20. So do get in touch with a very friendly team and have a look at AgriWebb and see how it could be a good fit for your operation. We've got other ways for all of our customers on the call at the moment about how they can get in touch, which Dave is the expert here.
Yeah, certainly. So we've got a few different channels for anyone to contact the Farm Success team. We're here to give you advice, to give you a hand wherever you need, and definitely happy to help. So through your app, your mobile app or your web app, you can access the live chat or schedule in a call with us. If you want to allocate a bit of time, maybe you want to sit down and go through some of your reports with us and have a look at how that might be looking on your end. If you want to upskill and learn some more information about the product or about AgriWebb in general, we've got a series of webinars that all the recordings are on our website. And we've also got the Help Centre with a huge array of articles in there that have a great deal of insights. If you have any suggestions for us, feel free to visit our ideas portal at ideas.agriwebb.com and send through your suggestions on improvements for the app. We absolutely love hearing these, and we form a lot of the basis of our updates come from the suggestions from each and every one of you. And of course, we've got a community of like-minded farmers on our Facebook community. So please jump on to the Facebook page and join into that as well. And we'd love to have you involved in the community there as well. Now we are going to say goodbye shortly, but I just want to say another big thank you to everyone who has sent in, where they are, what they're doing. Simon, I believe we had someone in there from Tamworth, Andy, so could be your neighbour. We also heard from Bronwyn in Harden, Damien and Kylie in June, New South Wales, Tina in Victoria. So it's certainly great to have you listening into the webinar with us. We're doing many more of these each month, so continue to tune in and we hope we can keep delivering some valuable content to you. And I think, Hannah, I can speak for the both of us that we've really enjoyed this and been able to share these insights with you. And thank you again to Simon for contributing and giving your expert advice. It's a pleasure to work with you, and we'll continue to do so.
Absolutely. Yeah, thank you very much, Simon. And as Dave said, we love hearing ideas. So whether it's product ideas, whether it's webinar ideas, whatever you would like us to focus on, we'd love to hear them. So thank you, Simon, again. Thank you, everyone, for joining. And we look forward to seeing you all on our next webinar.
Yep. See you later, everyone. Have a good end of the week.